What's up, guys? It's been a while, but I'm back making videos. Welcome back to another edition of what happened in the stock market this week. Now, this week was an exciting week because a lot of popular names reported, and not only that, a lot of them reported surprising earnings that surprised everybody, and no one was expecting this. So, I kind of want to go over who reported this week and what happened with earnings. So, the first company that I want to talk about is Apple. Apple reported earnings on Tuesday, and if you've been following Apple, they've been on a crazy tear the last year. I think they've been up something like 90% the last year. But just looking at the stock, it's been on a crazy tear. It's just been going up and up and up. And there was a lot of concern going into this earnings because concerns on the iPhone sales, deceleration, greater mainland China, which were all concerns in the last earnings call. So there was a lot of concern going into this earnings. But they reported amazing numbers and the stock shot up. This stock is still going up. Apple, whether it's justified or not. Apple CEO Tim Cook even described this quarter as a blockbuster quarter all the way around. So that just goes to show how amazing this quarter was. And so they reported revenue and profit above what analysts were expecting. Just looking at some of their numbers, they reported revenue of $91.8 billion versus what analysts were expecting of $88.5 billion. Their EPS, they reported EPS of $4.99 per share versus what analysts were expecting of $4.55 per share. Their iPhone revenue, 55.96 billion versus 51.62 billion estimated. So that was kind of like the main things. Gross margin, 38.4% versus 38.1% analysts were expecting. The services revenue missed on that aspect. It was at $12.7 billion versus $13.07 billion analysts were expecting. So just looking at these numbers, they reported good numbers. Services was down a little bit, but Apple's revenue was up 9% to $91.8 billion, which this even beat their own guidance. And this is a completely different story than the story that they were telling last year. So last year they had to revise their guidance downwards based on weakness in China. And what Tim Cook had to say this earnings was that the Greater China segment, which includes Taiwan and Hong Kong, had returned to growth in the quarter, which the quarter ended in December. So that's one thing that people were concerned about, and that's one thing that he addressed in the call. Other important things that Tim Cook mentioned was that there's still more demand than supply for the Apple Watch Series 3 and the AirPods Pro, which we know is going like hotcakes right now. Apple's earnings were partly powered by the iPhone revenue, which was up 8% in the quarter based on the strength of the new iPhone models. So this was up to $55.96 billion. So what did I think about this quarter? I think that this was an amazing quarter. It kind of calmed people's fears because back then we had the trade war going on. The China numbers were not good. There was talk about like deceleration and iPhone sales. So kind of calm those fears in regards to those concerns. But there are other risk factors that people have mentioned, such as services revenue not beating what analysts were expecting. So analysts were expecting a certain numbers, and services revenue came in under that, and that's supposed to be the growth driver for the company. So all in all, there are some risk factors, but I feel like Apple has a lot of tailwind behind them that they are a good long-term hold. So I believe they're a buy. Maybe not at these valuation levels right now, but for a long-term hold, once it gets fairly valued, I think that they would be a buy. All right, the next company to report. This is a crazy company that it's a very polarizing company. I'll just say that. And so this company reported Wednesday. A lot of people like were shocked when the earnings came out. I was shocked when the earnings came out. And this is the company that everybody knows, Tesla, the company that everybody's talking about. This was the talk of the week, all right? Tesla reported earnings on Wednesday, and they announced blockbuster earnings, okay? So they reported better than expected results on Wednesday, and even saying that is an understatement, okay? So they posted great quarter four numbers and even better guidance. And so I think that's one of the reasons that they were up is based on their guidance, because they said a lot of things that would be great growth drivers for the company. All right, but just going to the numbers, what are their numbers? So revenue, they did $7.38 billion versus what analysts were expecting of $7.02 billion. For earnings per share, they had $2.14 adjusted versus where analysts were expecting $1.72. So they beat on both revenue and they beat on both earnings. And the stock spiked as much as 13% in after hours trading after they reported earnings. And this stock also has been on a tear. It's just been going up. And something to say about that is, hold on, I just want to get the numbers right. And just going into the stock and what it's been doing, it's been on a tear lately, like I said. I feel like there's a lot of mania with this stock right now. Some people may say it's justified, some people may say it's unjustified. But just looking at it, they've doubled in the past 3 months. Its market cap has passed $100 billion, making it officially the world's second largest automaker right behind Japan's Toyota Motors. And despite delivering only 367,000 vehicles, all right, it's now more valuable than American companies such as General Motors, which sold 8.4 million vehicles in the last year, and Ford, which sold 5.9 million vehicles in the last year combined. All right, it's worth more than those companies combined. So what are your thoughts on how Tesla is valued right now, and what are they doing? All right, what are your thoughts on how the stock is doing, one, and how the company is doing? Would you buy Tesla at these levels? But going on to the earnings report, maybe these are some tailwinds and why you would in the company and reasons why you would buy the stock. All right, so just naming some of the things they listed. All right. So I think one of the reasons why they spiked up so much is because of what they guided for, right? So this year they delivered about 367,000 vehicles. And analysts were expecting them in the next year to do about 460,000, 475,000. Tesla said, no, we're going to deliver about 500,000 vehicles next year in the year 2020. So they kind of just straight up, so 500,000 from 367,000 to 500,000 vehicles. So that's a big jump right there. And then they also named other things that they're going to do in 2020. So the Model Y production ramp has begun. The Model Y production in Shanghai is supposed to start in 2021. They're planning limited semi-sales this year. They have these solar and storage deployments to grow 50%. So that's kind of like what they're guiding for in the next year and the next year after that. So there's a lot of things to look forward to with Tesla, but please give me your opinions on what do you think. Is this a good company to buy with everything that came out in the earnings report and what they have going for them right now? Or do they have a lot of risk factors? Because just a little time ago, people were wondering if they were going to go bankrupt and this and that. But now they're saying they're not going to do a capital raise. So it's just a lot going on. So just tell me your thoughts. What do you think about Tesla? And how the company is doing, how the stock is doing. Like, would you buy these levels? Would you buy right now? Would you buy it all? So let me know. All right. So the next company, Facebook. All right. Facebook reported Wednesday. I'm sure a lot of you use the Facebook services. You either use Facebook.com or use Instagram. Like, everybody's aware of these apps. Everybody knows Facebook. Facebook is a popular stock also. But people have their opinions on this stock. So some people love it. Some people hate it. It's social media. I'll just say that. So Facebook stock was down almost 7% after reported earnings. And it's crazy because at first it had beat revenue and it had beat EPS. So it's kind of like confusing when you saw the headlines on it beat, but the stock was down 7%. But digging into it, we can see why. Why was Facebook stock down 7% after earnings? That's a good question because you saw the headlines. It beat on the top line. It beat on the bottom line. So why would Facebook stock be down 7%? After reported earnings? And the reason for that is because of the dramatic deceleration of growth, all right? So they reported higher operating costs, operating expenses, and then they posted narrowing operating margins. So they're spending more and their margins are contracting, okay? And then there's also the deceleration of growth in revenue. So just looking at their numbers, like I said, it beat top and bottom line. So the revenue, $21.08 billion is what they did in the quarter. Analysts were expecting $20.89 billion. For earnings, they reported $2.56 per share. Analysts were expecting $2.53 per share. Daily active users, these came in a hair above in line. So daily active users 1.66 billion people versus 1.65 billion people that analysts were expecting. Monthly active users 2.5 billion people versus 2.49 billion people forecast by analysts. Their average revenue per user $8.52 versus $8.38 forecast by analysts. So their average revenue per user was up also, including with the top line growth and the bottom line growth. But like I said, their full year 2019 costs and expenses came in up 51% compared to its total in 2018. So that's just something to look at, something to consider. And this coincides with the drop in the operating margin, like I said. And just looking at the numbers, their operating margin dropped from 45% in 2018 to 34% in 2019. Revenue growth in 2019 was 24.7% compared to the prior year, which shows that revenue is decelerating, all right? So Facebook for the quarter had revenue growth at 24.7% up from the last year. Now looking at this number, revenue growth is decelerating. But with this said, I still believe that 24.7% is a respectable number for a growth company. And with this being said, scaring investors the fact that this deceleration, higher operating expenses, narrowing margins. Facebook has something about like 1,000 engineers working on privacy, which is more than a lot of tech companies have engineers total. So just taking that into account. And one thing that I wanted to mention also that I think that was important is that they announced a share buyback program. So what do I think of Facebook? I think Facebook is a buying opportunity, quite honestly. They have a lot of tailwinds for them, and I think a lot of growth in the future. So just looking at what they said, they have 8 million advertisers right now as compared to the 7 million they had in October 2019. Advertisers up, they have the top social media apps, Facebook.com, Instagram, which is not completely monetized, WhatsApp, which is not completely monetized right now. Looking at their balance sheet looks great. Like they have a lot of cash on hand. They have very little debt. I feel like they have a fortress balance sheet. They're investing a lot for the long term, which is what I like to see in a company. Very great management. One risk that I see is regulation and the breakup of Facebook, but or just regulation in general. But I don't really see that happening. With that being said, all in all, I believe Facebook is a great buy. All right, another company that reported, everybody uses this. Amazon reported Thursday, and it was like all these killer earnings coming out. Okay, so Amazon came out, they absolutely smashed expectations of what analysts were expecting. No one was expecting this really. So shares at Amazon were up 11% after reporting earnings, and its market cap surged above $1 trillion after hours, all right? So let's look at their key numbers. Their revenue, they did $87.44 billion versus what analysts were expecting of $86.02 billion. Their earnings per share, they did $6.46. They did $6.47, versus $4.03, what analysts were expecting. Amazon Web Services revenue, they did $9.95 billion versus what analysts were expecting of $9.81 billion. So just looking at these numbers, like they did great numbers, smashed the expectations. The revenue growth was 21% for the fourth quarter, which indicates that the company's investments in speedier shipping are leading to more purchases. Right. One of the things that I find most interesting is that Amazon Web Services, which is the fastest growing part of their business, accounts for 2/3 of their profits. So just looking at their profitability, I think that was one of the most surprising things, because if you've been paying attention to their past earnings, that's one of the things that has been a concern, because they're making a lot of investments, margins narrowing a little bit, and a concern was profitability. But they came out and smashed us. Like that was the most surprising thing, was their profitability. Most people did not see this coming. The magnitude of the EPS, I think, is staggering. And so just looking at some of the numbers, as expected, the company's worldwide shipping costs increased significantly during the quarter, climbing 43% year over year. Despite Amazon's growing investment, its net income rebounded. So its net income was up 8% year over year, and I just want to get this right, to $3.27 billion, which topped analysts' expectations of $2 billion. And just looking at their past quarters, all right? So in the third quarter, their net income slid 26%. And that was attributed to their investment in the same day shipping. All right, so they invested a lot of money into same day shipping. Their profits were going down, and that was one major concern. But in this quarter, the profits and their net income were able to be rebounded. Another thing that I wanted to mention is I think the stock is up based on the fact that Amazon has underperformed the market, right? So if you compare Amazon to other tech names or just to the S&P 500, it's been underperforming the market, and it's been kind of in a consolidation zone. And another reason why I think Amazon was up so much is that Amazon, compared to other tech names and other names in the S&P 500, it's been underperforming the market. So I feel like this is Amazon playing catch up a little bit. In addition to that, just looking at other numbers, like their cloud business is up 34%. So I feel like if there was a risk factor, their cloud business was up 34% year over year, but it's a slight deceleration from a quarter ago. And that's supposed to be their fastest growing segment. And that's a segment that makes up 2/3 of their profit. It is a very important segment to them.